Hello everyone, today I am going to explain the topic of accounting cycle. Accounting cycle is a step-by-step process which we use to analyze and summarize our business transaction. The first step of this accounting cycle is identify transactions. Transactions such as sale, purchase, receipt of payment is identified. After that, all these transactions are recorded to the journal in a very summarizing and a chronological manner. After that, all the transactions are posted to the ledger in which these transactions are classified into different categories. Then, an unadjustment trial balance is prepared to check the accuracy between the debit and credit balances. After that, errors and adjustments are made to check the accuracy of financial records. After this, financial statements are prepared such as profit and loss account, trading account and balance sheet. Finally, the accounts are closed at the end of the year to prepare our business for the next accounting year. Thus, accounting cycle helps us to record and summarize our business transaction. It also helps in knowing the profit and loss and the financial position of the business. We learn learning at Ved International School, so join us today and do not forget to subscribe to our channel. Thank you. Bye-bye.